We are officially in a recession, and here's what that means for you. Now, I may sound a little bit too cheery for being in a recession. However, what I know is that the market is not going to be in a recession forever. And you know what that means? That means that prices are going down right now, and I can buy at the lowest possible prices potentially in my entire life. Overall, everything has began to shift downward, right? So we've seen a decreasing GDP over the past 2 quarters. And so now officially, as of July 1st, we're officially in a recession. Congratulations. It's basically like Christmas. So now it's time to go shopping. I have some good news for you. If you did not anticipate this and you thought that potentially a recession might happen next year or in a couple years and you thought you had some time, well, let me tell you, one of the best things that you can do for yourself right now is find a way to create some active income. In order to set ourselves up for success in the passive income space, we need to make some active income first. After we make some active income, we can then begin to reinvest that profit that we made into something that's passive. So get as much active income as you possibly can right now, because what we're about to see in the market is probably going to be the best shopping you've ever had in your entire life, right? So if we see something bottom out super low, we can begin to buy up those assets. We can begin to buy up those stocks. We can begin to buy up those companies. And guess what? If I buy 50% of a company right now, which is down super low, I may hold that for the rest of my life, because the likelihood of price going down lower than it did now is not very high. Guys, this is where wealth is created. This is where millionaires are created. This is the time not to be fearful. This is the time to begin investing into these things that are going to be paying us. So very important to make sure our active income is in place so that we have some cash to deploy. We have dry powder, and then as soon as we see good opportunities, we begin investing. And so what do these good opportunities look like? Well, if we begin looking at the stock market in general, there are 11 sectors. And so besides all the excitement around certain sectors that see maybe really rapid growth, those sectors are often affected as well when it comes to a recession. So whether I'm investing into stocks or into companies directly, or maybe I'm partaking in this space, there are certain sectors that I believe to be staples that do not get moved as much when it comes to a recession. They don't fluctuate up or down as much as the rest. They're kind of like recession-proof investments that allow us to stabilize our portfolio. So it's always important to have investments that are more risky, that are producing those exponential returns, but it's also important to have those investments that are stabilizers. We have stabilizing investments in our portfolio, which allow us to have some stability so that when the boat is rocked, when the economy is shaken, our portfolio is safe and it's stable, and it gives us a solid ground to stand on so that we know that, hey, no matter what, I'm gonna be okay. I may have been doing a little bit better when the economy was going up, but I'm still okay because I'm safe. I'm invested into this thing and that thing, and all these different investments are building this safety net for me so that even when I see a recession happen, even when everything else drops in value, I'm still protected. And so I believe there are 3 sectors like that. Number 1 is healthcare. Guys, people are always getting sick, right? There's so many things in our environment that make us sick. I'm not even gonna go into that right now, but the water that we drink, the food that we eat, all the different things that are being consumed by people means that people are going to be sick. Healthcare is not going anywhere. People are always going to need healthcare. We're not even talking about people getting sick at this point. We could just be talking about routine healthcare, checkups, different medical services that have to be provided to people in order to allow them to survive. Those things are always going to exist. The medical and the healthcare space is a very safe place to invest because of its stability, because of its ability to weather recessions and all these different things that happen in the market. Healthcare doesn't really run up as much when the economy is growing because, again, it's healthcare. It's a very unique sector, but it also doesn't drop as much when everything else is dropping. So next, it comes to consumer staples. So consumer staples, that's like food and beverages, right? Whether the economy is good or the economy is absolutely terrible, I bet you're still gonna eat lunch and you're still gonna eat dinner, right? Maybe you might consolidate it, make it a little bit smaller and just do one of each a day. The fact of the matter is that people are still going to eat, they're still going to consume food, and they're still going to consume beverages. This actually extends over into tobacco and alcohol as well, because again, those are things that are always going to be consumed. In fact, I believe that some people may even consume more alcohol when recession hits, but I'm just kidding, that's a joke. And finally, I believe that transportation, so industrial sector, right? The industrial sector is maybe industrial transportation, right? So that food and that beverage has to get to your local Costco somehow, right? Or whatever store you go to, it has to get to the store some way, somehow. And guess what? It's not gonna walk itself. No, it has to get delivered by some sort of industrial transportation. So anything industrial, semi-trucks, shipping containers, right? Anything that's involved in that specifically, that typically will be something that I believe would perform well in a recession environment. So if we look back at the markets, if we look at what happened during previous recessions, we can see that these sectors remained relatively stable, and they allowed investors to stabilize their portfolios. So again, when they owned a bunch of Microsoft, or they owned a bunch of Amazon stock, or all these different stocks that had exponential growth, and then those stocks crashed, they were able to stabilize their portfolios by owning healthcare. They owned some transportation, some industrial, right? And they also owned consumer staples, food and beverages. So by tapping into those industries, investors were able to hedge against that impending risk that happens with recessions. So recessions do affect the market, but if you protected yourself, if you have a little insurance policy, you could even call it your insurance policy, right? We have our little insurance policy consisting of healthcare, of consumer staples, which are food and beverages, and of industrial type investments. Me personally, I don't even focus on the stocks. I go deeper. I take the extra step and I actually go into those industries. So hey, if I know that industrial investments are likely to perform well over the next 6 to 12 months, maybe 24 months, I'm gonna find a way that I can tap into that. Maybe I can find somebody that runs a semi-truck company, and maybe I can buy a couple trucks and place it into their company, and they can run their business with my trucks, and I get a percentage of their profits, right? And because I believe that that sector is going to do well, consumer needs have shifted in their favor, I believe that sector is going to do well. And so if I can find companies in that sector that I can invest in, maybe I can buy a percentage of that company. Maybe I can give them some operating capital and in return get an equity of the company, right? That's even more profitable for me because I'm not relying on the performance of a single stock. I'm relying on the performance of that specific company. And maybe I even believe in the execution and the potential performance of that person running that company, as opposed to maybe a stock that I see on the stock exchange. So that's just something to think about. As you get more tangible with these sectors, it's likely that you could get a higher profit. So stocks are one thing, but if you can get into the weeds a little bit, if you can find a nice company that you want to invest in, that you want to partner with, that you want to be a part of, you want to own equity in, that's where the real money is made, in my opinion. That's been my approach to investing, and that's been successful for me. So hope you guys found this very helpful. Make sure to leave a comment, like, subscribe, and I'll see you all in the next video.